Hi, I'm Jim Jubak, and welcome to my YouTube video for February 10th. When I bought this t-shirt, I bought it because it was a cool t-shirt. I didn't understand what the 1965 reference to. So from 1952 to 1965, there were no mud hens. 65, they came back, they resurrected. The mud hens rose from the mud, as it were, and so that's ergo why this replica t-shirt is picked that year. Before we start, let me say, if you like this video, please like it. You can subscribe to my YouTube channel, and that way you'll get notification for all the videos that I do, and I do about 3 a week. If you want to see more of my stuff, you can go to my free site, jubakpicks.com. It has 3 portfolios, 12 to 18 months long-term, and then dividends. Or you can go to my paid site, jubakam.com, which has 6 portfolios instead of 3, and we do some options and ETFs. So today's topic, 50 basis points in March because the Fed is scared not to. We had a very big inflation number this morning, big both in importance and both in size. This was the CPI, the Consumer Price Index. It came in at an annualized 7.5. This is the all-in number that includes energy and food. 7.5% annualized rate of inflation. That was, economists were expecting 7.2 or 7.3, and it busted through that. It's also way higher than the annualized rate back in December of 7%. The theory going into this was that if it came in above expectations, it almost locked in, almost guaranteed a 50 basis point increase in the Fed's federal funds rate at the Fed's meeting in the end of March, March 16th, middle of March, the Ides of March. Okay, so now the market is pretty much convinced that we're going to do 50. There's some possibility that the Fed might not, but you can't see it in any of the numbers. So here's a tool that I want to show you about. It's from the Chicago Mercantile Exchange, and it's called the Fed Watch, and it tracks expectations for interest rate moves by the Fed using the Fed funds futures market. So basically it tracks what people are willing to pay for various things so that they can figure out what the odds are in terms of people's expectations for this. So these are the odds for a rate increase in at the March 16th meeting. Right now, the short-term rate is 0 to 0.25. This bar of 15% represents one 25 basis point increase. A 25 basis point increase is usually the way the Fed starts. Doesn't go in and go 50, but market right now is saying there's an 85% chance of a 50 basis point increase. And this morning we had the chairman of the St. Louis Fed, James Bullard, saying, hey, I want 100 basis points. That's a full percentage point increase by July. So on the basis of pure economic data and facts and policy, it's not clear whether the Fed should raise 25 or 50. There are people who say that, well, we're looking at inflation peaking in February, so maybe 50 basis points would be an overreach. It would take too much out of the economy all at once. So maybe we ought to do 25. I think there's a very strong argument to be made in terms of starting slower and then gradually increasing if you need to. It's not clear where Fed Chairman Jerome Powell comes down on this. He might, so far he seems to be sort of in the 25, but maybe 50% camp. 50 basis points camp. But really, for me, the question is politics. There was a great 19th century American comic journalist named Finley Peter Dunne, and he had a character named, who was an Irish barkeep in New York, who was named Martin J. Dooley. And Dooley went around giving prognostications. And one of the things that Dooley said, Mr. Dooley, said was after the Supreme Court decided that it was constitutional for the U.S. to turn the Philippines into a colony, what Mr. Dooley said was, hey, the Constitution doesn't follow the flag. That was the argument for many imperialist, expansionist-minded Americans. The Constitution doesn't follow the flag. The Supreme Court follows the election returns. That is true for the Fed too. And one of the things that leads me to think the Fed is going to raise by 50 basis points in March is because it's scared not to, politically. Not politically in terms of Democrats or Republicans, but politically in terms of its own credibility. There are a lot of people out there who think the Fed is behind the curve on inflation, has blown it by waiting too long. And I think the Fed is going to do 50 basically because it needs to make sure those people stop carping, that the market needs to have its faith in the Fed and being on top of policy restored. And that's why I think we'll get 50 basis points in March. I think that might be more than the economy needs. The problem is right now we don't know. One of the reasons that I would favor moving slow, but hey, I have not yet been appointed to the Federal Reserve, although I'm waiting for the call. Anyway, thanks for watching. If you like this video, please like it. You can subscribe to my YouTube channel so you get notification of all of them, so that you get stuff like this. You can also check out my free site, jubakpicks.com, or my subscription site, which has 6 portfolios instead of 3 on the free site, and that's at jubakam.com. Links to both of those are below. Thanks for watching.